Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning. Today is Wednesday, the 22nd of November. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so let's take a look at this is the key takeaways or the key gist of our daily dose of market insights. So let us start with a recap of what happened last night first during the European session, during the European session all the way up to the US session. So yesterday, let's start with the US benchmark stock market. So the US benchmark stock market is kind of a lackluster yesterday after we see a very strong rally in 1.5 weeks starting on last Tuesday. So if you look at the performance of the US stock market very quickly, what we could see over at my screen over here, the SPX actually kind of a not that we call it bad, it's more like a profit-taking behavior yesterday on the SPX and the Nasdaq 100, down negative 0.2%, the Nasdaq 100 down negative 0.58%, and the Dow Jones Industrial Average actually outperformed. There's only inched down slightly lower by negative 0.18%. But however, the Russell 2000 comprises more of the small caps US stocks that is pretty much geared towards the US economy in terms of their revenue of the revenue very much dependent on the US economy is only underperformed with a negative 1.32%. So the reason why the Russell 2000 underperformed yesterday was due to two key US retailers earnings forecasts or earnings guardians actually came up pretty much lackluster. So one of them will be Lowe. Lowe actually cut sales outlook, and as well as Best Buy, which is also one of the major US retailer that cut their sales forecast as well. So that actually put a bit of downside pressure on the Russell 2000, given the fact that almost I would say a majority of the Russell 2000 component stocks or component company are pretty much dependent on the US economy to derive the bulk of their revenue. All right, so what it means that over here, the US economy in terms of the demand side of the story is likely to be weak going forward into the first half of next year. But however, that actually pretty much encourage the potential likelihood of the US Federal Reserve to start to tilt towards more of a dovish side of the story. That means, i.e., more or less, we start to see the tail end of the interest rate hike cycle in US that kickstarted 1.5 years ago. And right now, market participants are looking to actually to see when the US Federal Reserve will engineer its first interest rate cut. And bear in mind, yesterday, one of the key moments yesterday was the release of the previous November FOMC meeting minutes. So this pretty much story, right, is pretty much usual, or pretty much came in within our expectation, no big surprises. So this is actually pretty much in line with the general consensus of the few Fed speak that was actually being witnessed by the market after the last FOMC meeting. So it shows unity of cautious approach to future rate hikes. So pretty much data dependent on the progress of reducing inflation. Officials agrees Fed in position to proceed carefully. All right, so but however, what markets is actually pricing right now is more or less really see the peak of the interest rate hike cycle at the Fed fund rates of 5.25% and 5.5%. Okay, this is the CME Fed fund tool. So what is this tool? This tool is actually based on calculation derived from the implied future we call it implied expectation of the future rate move by US Federal Reserve, the Fed, based on the 30-day Fed Fund futures market. So if you look at the December meeting, which is in 13th of December, only a very, very small chance of 5% that the Fed is likely to hike one more time to bring the Fed fund rate at 5.5% to 5.75%. And if you look at the accumulated probability across the board, that means taking into account of the future Fed funds meeting in 2024 as well. So what we could see over here is that almost very, very low chance of a hike going forward in January next year, and even in March, and even throughout the rest of the year is less than 10%. So what it means that the market now has started to price in a very what you call it, a 360-degree tilt from a hawkish Fed to a much more dovish Fed, given the fact that right now the chances of the US economy turning into the softer mode on the demand side, it means demand will actually expected to slow down next year. That actually causes the expectation to actually to be rather dovish, where the Fed Fund futures, based on the CME Fed Fund Watch 2, expecting close to 30% chance of the first rate cut to come in as early as March next year. All right, so with that in mind, over here is that markets are tends to be a bit forward looking. So with this slowdown in the dovish bit of slowdown in this what I call hawkish tilt of the Fed, allows the 10-year US Treasury yield to continue to tilt downwards. So if you look at the US 10-year Treasury yield over here, okay, it continue to actually trade lower, slightly below the ascending channel that was broken down on yesterday. Okay, and also below the 20 and the 50-day moving average. All right, so right now we're going to see is a bit of softness in the US 10-year Treasury yield, and this softness in the US 10-year Treasury implied lower cost of funding globally, given that the US 10-year Treasury yield is being used as a global benchmark to price longer term corporate loans, for corporate loans, and as well as in a nutshell also individual loans as well. Okay, so with that, that actually benefited long duration risk assets, like example the growth stocks in the S&P 500, which is the 7 mega cap stocks, and as well as most importantly the Nasdaq 100. So that's actually explain why the SPX and the Nasdaq 100 was rather muted yesterday in the performance, rather than the underperformance in the Russell 2000. All right, and that also boils down to the fact that the dollar continued to remain steady, but however the US dollar index continued to trade below, okay, one second, continue to trade below its 200-day moving average. All right, moving average. So that it means over here is that this medium-term uptrend that was in place since mid-July this year is in jeopardy right now, and potentially the dollar could start to see further potential downside going forward from a multi-week or a medium-term perspective. So that also pretty much dollar weakness will also tend to translate to positive feedback loop into the into the equity market as per se in general. All right, so with that, and also what's important is NVIDIA. So NVIDIA, why is it important? Because NVIDIA released its earnings yesterday. Its price action is pretty much important for traders who are monitoring the benchmark US stock indices, especially the S&P 500 and the Nasdaq 100. Why? Because NVIDIA is the fourth biggest market cap index component stock, fourth biggest index component stock in the S&P 500 and the Nasdaq 100. So what you see over here is that yes, the numbers top estimate, but miss some lofter expectation. So that caused a bit of wild swing in the after trading hours. So NVIDIA actually tumbled close to negative 6% before recovering its losses during the after hours session. So let's take a look at the chart of NVIDIA that is most important, so which I highlighted yesterday. So this is the daily chart of NVIDIA. So if you look at NVIDIA over here, it's still trading within this medium-term uptrending channel that is in a major uptrending channel that is in place since the low of December last year. And what we could see over here is that the price action in the last few days or the last 5 weeks has managed to surpass above the median line of this channel, and also started to trade above the 220-day moving average as well. So this was yesterday's closing price action. what you could see, NVIDIA closed at around 1%, okay, still holding above the median channel line and as well above the 20-day moving average. So you look at the price section, ex-post earnings announcement during the wild swing over here. So let me highlight again. So you look at this wild swing, wow, this is the big wild swing over here, but price positively managed to recover. This is the hourly chart, and shows a bit of positiveness that it didn't actually trade below close to the low after during the last few minutes of the after trading hour session in US. All right, and also managed to help above the first intermediate support at 468. All right, so overall what we could see over here is rather positive in terms of the, okay, let me okay, let me highlight for your, again, sorry, let me go to the daily chart. Okay, I'm not highlight your something. Okay, so allow me to fix the moving average again over here. Okay, yeah, this is the moving average. So most important over here is that this is the first okay, 1 second. Okay, so this is actually should be the 20-day, my apologies, that's the 20-day moving average. So let me fix it to the daily chart so y'all could see much clearer. And this one over here is the 50-day moving average. Okay, let me fix it to the daily chart as well. Okay, so it actually correspond with the 468 level, 468 level, first support. So if you go to the 1 hour chart, okay, so I could see over here that yesterday's slide of the 6% managed to actually found some key support level at the 468, which is close to the 20-day moving average as well. All right, so this is a 20-day moving average I overlaid on the hourly chart. So all in all, we see a bit of what I call positive support coming into NVIDIA towards exposed earnings announcement. So that could actually give a bit of what I call credence to this still ongoing short-term uptrend that is in place in the Nasdaq 100. Later I will share with you all on the short-term technical outlook chart. Okay, so this is the key what I call data point, or the key as well as the key movement that actually took shape last night during the US session. Okay, so going forward, what are the key things to look out for today in terms of the economic calendar? Okay, so in terms of the economic calendar for today, will be Wednesday. So Wednesday, during the Asia session, pretty much quiet, except that we have the RBA governor will speak at 4:35 p.m. Singapore time. And during the US session, we have one kind of not really top tier, a lot more second tier economic data release, durable goods orders that be out at 9:30 p.m. Singapore time. And also going forward, earlier morning tomorrow, very early morning tomorrow at 6 a.m., you'll see the release of the flash PMI manufacturing and services data for the month of November in Australia. All right, so this is the key economic data that could actually potentially economic data releases and event that could potentially impact the global markets. Okay, so with that, let's jump into the technical chart. So now let's start with the FX market first, since just now we talk about NVIDIA. So for NVIDIA over here, what we could see, let's start with the Nasdaq 100. So what you see at the Nasdaq 100 yesterday, we do have a bullish bias, holding above 15,765/15,690 key short-term pivotal support, and I do highlight a slightly above a level over here, which is at 15,915. Okay, so before that, let me hide myself first so that we could focus more on the screen instead. Okay, so why do I highlighted a short-term intermediate support at 15,915? Because yesterday the RSI is at overbought level, so we did highlight that there's a risk of a pullback, and the pullback actually did take shape over here. And what we could see very interestingly is that after the pullback takes shape at the 15,915 near-term support level, the RSI starts to shape a higher low. Okay, similar low on the price action, but RSI shape a higher low after hitting the oversold level. So this gives us a sign of bullish divergence, indicating to us that this downside momentum that accompanied the pullback yesterday has more or less been abated or dissipated. So still no change. I don't want to tighten the key short-term pivotal support so tightly, so I remains the same at this level, 15,765/15,690. So as long as this level holds, potentially the Nasdaq 100 may continue its uptrend to see the short-term uptrend that is in place since 27 October low, as depicted by this minor ascending channel, where price action going to trade above the upper limit of this channel. Okay, the upper half of the channel. Next resistance to come in at 16,160, followed by 16,310, which is the upper limit of this minor ascending channel. But however, if we start to see an hourly close and a breakdown below 15,690, then this we call it a potential bullish impulsive up move will be negated to see a much more we call it extended corrective minor decline to retest the lower limit of this minor ascending channel, now acting as a support at 15,380. We also confluence with the former minor swing high of 9th of November, and coming very closely the 20-day moving average as well. Okay, so still maintaining that we call it a short-term bullish bias outlook on the Nasdaq 100. Now, Dow Jones Industrial Average, which is the US Wall Street 30, we name it our platform. So pretty much sideways yesterday, but what we see over here is that the pullback also managed to help right at the intermediate support that I highlighted yesterday at 35,055, and also with the RSI, the hourly RSI, also kind of managed to bounce off from a parallel support level at around the 43 level. Okay, so no change, still using 34,795 as my key short-term pivotal support level to maintain this potential short-term bullish outlook, intraday outlook. For the next resistance to come in at 35,295. Above it, potentially sees the next resistance at 35,830. But however, if we start to see a breakdown below 34,790, which is the hourly close below it, then we may start to see the start of a deeper corrective decline to actually expose the next intermediate support at 34,385/34,190, which confluence with the 50-day moving average coming to act as support, as well as the minor congestion zone over here, 13th of November to 30th of November, and most importantly, the pullback support of this former medium-term ascending channel that has been this former medium-term descending channel resistance that was in place since early August this year. Okay, so still maintaining that short-term potential bullish outlook on the US Wall Street 30. Okay, now German 30. So no change for the German 30. Yesterday it traded sideways within that ascending channel, within that minor ascending channel that I drew from the low of 10th of November. So still, I don't want to tight it so tight, the short-term pivotal resist support level. So still using 15,760 as my short-term pivotal support level, and a bit of positiveness coming back into the momentum picture. If you look at the hourly RSI starts to shape a higher low right above the 50 level mark over here. So indicating to us that a bit of what you call resurgence of short-term upside momentum potentially. Okay, so as long as 15,760 holds, the next resistance to watch will be 16,050. Above it, expose the next intermediate resistance at 16,240, which also confluence with the upper limit of this minor ascending channel from the low of 11 November. However, if we start to see a breakdown below 15,760 with an hourly close, then the price action of German 30 may evolve into a minor corrective pullback mode to retest the next support level, which is close to the key 200-day moving average, confluencing the graphical support area over here, the minor congestion zone over here at 15,620/15,560. Okay, so that's for the German 30 index. So pretty much lackluster on the Hong Kong 33. Kind of yesterday it pushed up, it pulled back, but managed to hold above this 17,700 short-term pivotal support that I highlighted yesterday. We also confluence with the 50-day moving average as well, where it bounces off it yesterday. RSI also managed to help above this parallel ascending trend line support level that I draw. So all in all, there is no kind of a what you call it, clear signs of a bearish reversal yet. So maybe I'll just give a bit of tolerance using yesterday's swing low level, which is 17,600. So I will slash it today, 17,700 slash 17,600 as my key short-term pivotal support level to maintain that short-term potential bullish outlook to retest the minor range resistance at 18,350. So this 18,350 was not surpassed since the high of 15th of September. All right, but however, if we start to see a breakdown below 17,600, then we will start to see another round of very choppy movement on the Hong Kong 33 index to retest this ascending trend line support that is in place since 24th of October low, now acting as a support level at 17,300. All right, so that's for the Hong Kong 33 index outlook for that. So going forward now, let's have a very much quick on the Japan 225. So Japan 225, what's interesting over here is that it starts to shape a strong bullish reversal after bouncing off from its 200-day moving average, and after consolidating since last Thursday, it managed to actually stage a rebound, bounce off this we call it a former medium-term descending trend line from 19th of June 2023 high. So if we go to the daily chart, we could see here, it's very clear. This is the strong rebound that is taking shape this morning with a very strong bullish Marubozu candlestick at this point in time on the daily chart. So with that, I'll be using 32,900 as my key short-term pivotal support level, which is this former, we call it minor range resistance from 10th of November to 11th November, now turns to pullback support, slightly below this minor ascending trend line support of 8th of November. Looking for the first resistance to come in at 33,825. So a break above 32,825 potentially takes us up to the one-time Fibo extension, linking the lows of 31st of October to the high of 4th of November, projected from the low of 8th of October, then at 34,480 level next on the Japan 225. But however, if we start to see a breakdown below 32,900, then this bullish buyers scenario will be negated to see a start of a much more pronounced minor corrective pullback to retest the 20-day and the 50-day moving average, which is also acting as confluence with the graphical congestion zone over here at 32,260/32,085. Okay, now FX market. So going forward to the FX market, so let us start with the dollar yen first. So for dollar yen, you could still recall yesterday we are looking for a potential counter trend move, holding above 47.45. So price indeed actually tested 47.45 and staged a rebound. And right now the RSI has really inched above the 50 level mark, haven't hit the overbought level yet. So potentially right now, this dollar yen on the hourly chart could continue to shape this continuation of this potential minor counter trend rebound. So let's stretch again. Minor counter trend rebound within a short-term downtrend that is still in place. Why? Because if you look at the price action, is still trading below the 20 and the 50-day moving average. Okay, and as well as if you were to draw a trend line, okay, a descending trend line, okay, it here's haven't hit this level yet. So what I could do over here for today, I'll be adjusting the resistance level slightly using the high of 48.70, followed by this 49.20 level. Okay, let me graphically which is the 50-day moving average, I think as a resistance. Okay, so if I were to draw a Fibo retracement from the last push down, it's confluence with the 38% and the 50% retracement. So first resistance 48.70 taken out, potentially 49.20, which confluence with the 50-day moving average. So this particular zone over here, given that this is only a counter trend rebound, that could actually lead to another round of fresh potential impulsive down move coming to unfold next. All right, given that the fact that the dollar yen is still we call it evolving within a short-term downtrend. All right, but however, if we start to see a breakdown below 47.45, immediately this counter trend rebound will be we call it more or less hit its terminal level at yesterday's US session high, which is 48.60. Then we will see a continuation of this impulsive down move to test the next support level at 146.60/146.20 on the dollar yen. Okay, then for the Aussie dollar, no change on the Aussie dollar. Still recall that yesterday we turned neutral. Why? Because the recent up move has really hit this key, we call it level at 65.95. So what 65.95 is the 200-day moving average, acting as a resistance. Okay, bear in mind is the hourly chart, and as well as the minor ascending trend line support, minor ascending channel resistance that I draw from the low of 26th of October 2023, which is also confluence at 65.95. So more likely going to be neutral. That means sideways between 65.95 and 65.20 on the Australia dollar for today. Okay, then what's next for the European currency? So for the European currency, yesterday euro dollar, we do expect a minor pullback, holding above 1.088 level. That is my key short-term pivotal support yesterday. So no change. What's interesting is that the price action right now on the RSI start to shape a higher low as well, slightly above the oversold region. So indicate to us that there's a chance of a revival of short-term positive momentum starting to creep back into the euro dollar. So still no change, using 1088 as a key short-term pivotal support, still maintaining that short-term potential bullish outlook, to look out for the next intermediate resistance coming in at 1.099, which is the upper limit of this minor ascending channel that I drew from the low of 2nd of November. Above 1.099 exposes the next resistance at 110.40. So what 110.40 is actually the congestion zone over here, from 26th of July all the way up to 11th of August this year. Okay, we'll see. Yeah. So however, if we start to see a breakdown below 1088, that means an hourly close below it, potentially we'll see a continuation, extension of this minor decline to retest the lower limit of this ascending channel, and as well as confluencing with the 200-day moving average, also acting as a support at around 1.0825. Okay, so very similar movement on the sterling pound, which is the sterling dollar. So on the sterling dollar, what we could see over here is it start to kind of trade sideways yesterday. So I do not want to actually keep my resistance, my key support level so tight, because now this resistance level 125.20 now turns into a pullback, minor pullback support. Okay, so I do not want to maintain it so tightly. So I still use the 200-day moving average, and as well as the former minor swing high of 17th of November at acting as a support at 124.40. So using 124.40, maintaining that short-term pivotal support level, still maintaining that short-term bullish, short-term potential bullish outlook on the sterling dollar, with next resistance to watch at 125.40. Above this level, the next intermediate resistance may come in at 126.80. So what's 126.80 is actually this minor congestion area over here as well. Okay, so still maintaining that short-term bullish outlook on the sterling dollar as long as 124.40 key short-term pivotal support holds. But however, if we start to see a breakdown below 124.40, then potentially we could see the start of a minor corrective decline within this short-term ascending channel, to expose the next support level at 123.75 in first step. A break below it exposes the lower limit of the ascending channel, we saw confluence with the 20-day moving average acting as a support at 123 figure. Okay, so that's for the sterling dollar. So now commodities market. So let us start with gold first. So for gold over here, what we could see is that yesterday we were bullish for gold, looking at the resistance at 2006. So price indeed hit 2006. So what I could see is that after price level hit 2006, the RSI also went up to the overbought region before pulling back towards the 50, before pulling down. But upon hitting the overbought region, price action going to shape higher. There's no bearish divergence, in line with the price action of gold as well. Spot gold, that's XAU/USD. So no clear signs of a we call it bearish reversal, where price action may start to tumble down to retest the 200-day moving average. So all in all, what you could see over here is that potentially, given the fact that the RSI has now begun to work off from its overbought level, heading now towards the back towards the oversold region again. So potentially there could be a pullback, minor pullback taking shape for gold for today in the short term. Key support level to watch on the intermediate term will be this zone over here. Okay, oops, sorry. Yeah, at 1984 level, which is this congestion zone over here, retested on Tuesday European session, which is yesterday European session. So 1984 first intermediate support level, but I don't want to tie it so tightly as my key short-term pivotal support level. I'll still use the 20-day moving average as a key pivotal support level, which is conferencing with the graphical 1972. So as long as 1972 potentially still holds, the next resistance level to watch on gold XAU will be at 2028/2037. So still maintaining that short-term bullish outlook on gold XAU/USD. But however, if you have an hourly close and a breakdown below 1972, then this potential pullback will start to translate into a more extensive minor corrective pullback heading towards the next support level at 1957, and also with the risk of retesting the 200-day moving average, I think as a support at 1932 as well. Okay, so that's for gold. So for WTI crude oil price, in the hourly, it continued to trade sideways over here below the 200-day moving average at 78.10. So still no change. We'll be looking for a potential pullback towards 76.55. Key short-term pivotal support will be at 74.90. So what 74.90? Recap. Is the last taking the last swift up move from last Friday low all the way up to Monday US session high is at the 61.8% Fibo retracement. Okay, so I don't want to tie it so tightly at this minor graphical support here, which is 76.55. So still using 74.90 in any pullback as a short-term pivotal support level. So as long as this short-term pivotal support level is not surpassed to the downside, potentially WTI crude oil price could shape another kind of a minor potential push up to retest the next intermediate resistance at 81.05. But however, if we start to see a breakdown below 74.90, then it will start to see extension of this potential decline to retest last Friday low at 7270/7240, which is the key medium-term support for WTI crude oil, which is the West Texas Oil Coil platform. So this is the level we are watching on the medium term. So this is the medium term ascending trend line support level from the low of 16th of March. Okay, came in at 72.40. Okay, so that is for the key highlights that I share with you all for today. So do have a great day ahead, and we shall speak again tomorrow.